This quarter, you showed significant growth around new user additions as well as growth of engagement. Now, how much of that growth is due to people having more time on their hands because they're stuck at home during these coronavirus lockdowns? And how long do you think that kind of growth will continue?
Well, our user growth is calculated as an average over the quarter. So a lot of what you're seeing is really momentum starting from the beginning of the quarter. And then obviously a lot of engagement growth around some of the stay-at-home orders and things like that. So, huge growth in gaming, content consumption, but ultimately, Snapchat's really for helping people stay close with their friends and family. And that's never been more important during this difficult time. So certainly seeing, the stay-at-home orders catalyze engagement growth, but that user growth, is really momentum carrying over from the beginning of the quarter before we saw that engagement growth impact.
Now, just yesterday, Netflix CEO Reed Hastings warned that he thinks that once people get back to work, once they start leaving their homes again, that they'll see their user engagement and their subscription growth really drop off. Do you fear you'll see the same thing in the second half of the year?
We believe that, staying close to friends and family is important no matter where you are, whether you're at home or out in the world. And so, we're really optimistic that user growth can continue. There certainly may be changes in engagement growth if people, are watching less content because they're staying home a bit less. So, we'll see how that evolves. But we certainly think that in terms of user growth, people, really feel like they want to be connected to their friends and family. And I actually think this period of time is a bit of a reset where people are reprioritizing what's important to them.
Now, your revenue grew far faster than expected as well, but you are reporting revenue growth declines, 15% revenue growth beginning of April down to 11% growth this week. How much more do you expect those revenue numbers to fall? What's your outlook for that going forward?
There's so much uncertainty, so it's really hard to say looking forward. But, we are pleased that we're continuing to grow, and a lot of that's driven by direct response advertisers. We're seeing a lot of success and leaning into a lot of the down funnel optimizations that we provide. So there are many businesses who can be really successful serving their community while they're at home. So, for example, at home exercise or even some of the beauty folks gaming, and they're really leaning into these down funnel optimizations, seeing a lot of success and increasing their spend. So, we're seeing a lot of success with direct response advertisers. We're optimistic that the situation could improve, especially as some of these stay-at-home orders are lifted. But there's just too much volatility. We don't want to guide into the future yet.
Now, I want to ask you a little bit more about these direct response ads. And just to clarify, for our users who are not as familiar with this world, this is different than a brand ad where you're just promoting a brand. This is about being able to show someone something that they could click to buy or click to go somewhere else. A lot of these, I understand, are direct-to-consumer brands. Is there a risk that these advertisers could fall off as well if the economy continues its downturn?
Certainly, there are some direct-to-consumer brands on the e-commerce side. They actually may be better positioned given that they don't have a retail presence. And so therefore, they can redirect money they otherwise would have spent on their retail presence into advertising and really, positioning their brand where people are hanging out. So rather than hanging out at a mall right now, people are spending time at home with their friends online. And so I do think some of those brands, the supply chain issues aside, are actually very well positioned to accelerate in this environment.
Hi, Evan. It's John Fort. Thanks again for being with us. I want to ask you about something that you pointed out along these same lines on the earnings call. You talked about bright spots among those direct response advertisers. You pointed out some categories, including exercise, beauty, and gaming, that are potentially strong. But who's holding steady? If anyone, not maybe particularly strong? And what are you seeing that's especially weak? Because you're giving us one of the first looks that we see at the health of the digital ad market overall.
Well, I think there's a really good opportunity here for CPG brands, mostly because a lot of consumers are totally changing their consumption patterns during this point in time. And brands really want to be there for that transition and that journey. And so, we're seeing a great campaign right now from Dove that's about courage. They're running commercials across Snap. And I think that's been a really powerful way that they've been able to show how they're making a difference and sharing that with our community. So I definitely see an opportunity for CPG as consumer behavior shifts. The obvious ones, that the travel folks are struggling right now. People can't travel, and so they're pulling back spend. But that's an opportunity for us to go really deep and build technical integrations with those folks so that when people do start traveling again, that we'll be able to provide that same down funnel optimization that we're able to provide e-commerce folks and app advertisers.
Evan, Morgan Brennan here. Great to have you on Squawk Alley. I think historically, Snap has always been a company that's been associated with Gen Z and millennials. But looking at the user numbers that you reported yesterday, how are the demographics of that base expanding, and why? What specifically, or what products specifically within the Snap universe are driving it?
Demographics, continue to expand for us, mostly because everyone enjoys talking with their friends and family, and doing that visually through our camera is just a lot of fun. So, we see it here in our house. Our 2-year-old, is video calling with his great grandmother, and they're using lenses and having a blast together. So I think Snapchat crosses all generations, and we're seeing growth, across our demographics.
Evan, it's Carl. I got 2 questions. One, just on expense control. How much of a focus is that going to be for you guys going into the second half? And secondly, are you interested at all in using your technology to help a broader sort of nationwide testing facility, tracing facility, if in fact we get that far as a country?
Yeah, so, I think at a high level, Apple and Google seem to be very well positioned to work on tracing. And that's something that they're investing in right now. So we'd be happy to support those efforts if at all possible. And it seems like the way they're thinking about that is protecting user privacy. And sorry, your first question?
Just on expense control this year. Obviously, the guidance is cloudy for all the companies that are reporting, but I wonder how much safety you're building into expenses for the second half.
Yeah, we're really lucky that we focused on expenses and really on building more efficiencies in our business over the last 2 years. So that's positioned us very well going into this situation. We definitely see a path to full year adjusted EBITDA break even, around 25% year over year revenue growth. So again, too early to say what'll happen, but we definitely see that path. The balance we're trying to strike here is that because we're seeing so much momentum in our business, obviously lots of usage and engagement growth, we want to lean into that and continue to investing. So we're hiring and we're working on building a lot of really cool new products. And so we're trying to strike the right balance. We definitely still see a path to full year adjusted EBITDA profitability. That's something we're working towards. But we have to be thoughtful about the balance because we think we can emerge from this a lot stronger.
Evan, it's Julia again here. I want to get a sense of what you think your business is going to look like moving forward. And I know we've been showing a lot of images of your augmented reality lenses on the screen here next to this conversation. But tell me, as people spend more time at home, how do you see augmented reality really becoming more of a revenue driver, especially in your work with advertisers?
Well, I think the most important step here is for augmented reality to become more of a utility. So today, I think it's still considered entertainment for a lot of our community, but increasingly we're seeing these utility use cases evolve. So one example might be, beauty testing and sampling. That's something that historically has happened with physical products, but increasingly, and especially because of the risk of transmission, beauty brands are looking at investing and doing that sort of trialing and sampling virtually using augmented reality. We're also seeing a lot of use cases with try-on, things like trying on a new pair of shoes using augmented reality that we think can help enhance e-commerce experiences. So a lot of this will be helping brands build the 3D assets necessary to power AR experiences. But what we're seeing is that there's a lot more interest in using augmented reality as a utility to drive businesses. And that's what we think is going to lead to increased monetization down the road. So we're really on this path, from entertainment to utility and then to increased monetization. But, all the engagement increases we're seeing on augmented reality right now are spilling over and lifting, sponsored augmented reality experiences as well. So we're seeing an 18% increase in playtime with sponsored AR experiences. And so that bodes very well, I think, for the future of AR.
And what about your Discover content section? I mean, I know you've been investing a lot in originals. How will the shutdown of production for most productions impact your content and all the engagement around it?
There will be some impact, certainly, to some of our shows. We have been extremely excited and grateful that our partners have been really creative and continue to produce daily shows from home. So I think that that's been really great for our community to still stay in touch with those brands on a daily basis. Some of our shows, production, we believe could restart around July. And if it does, the rest of those shows will release through the end of the year. It'll be a little lighter, towards the end of the summer, but then we'll probably see more releases in the fall.
Hi, Evan. It's John Ford again. I want to ask you a question that really looks at you as a business leader as well as the leader specifically of Snap. The LA startup ecosystem, like every startup ecosystem, has to be feeling this in a really difficult way. What are you seeing? What are you advising other entrepreneurs during this time? Is Snap doing anything to offer assistance to other companies in the startup ecosystem? Are you looking at acquisitions or other sorts of support?
It's certainly a really challenging time for everyone. We're currently running our Yellow Accelerator program virtually that supports local startups. And actually, we're talking right now as a team about how we can expand that. We're also talking to all of our partners and other startups in the ecosystem to see if we can offer support, whether that is through investment or other forms of partnership. We've been able to rev share with many of our content partners, and that's supporting them through this time. So, we think there's a lot of different ways to support our partners. Another really important piece of this is trying to work together across the business community to envision what reopening looks like. So we're trying to help our community that way as well by sharing our planning, sharing how we're thinking about it. So there's really a team effort across Los Angeles, obviously in conjunction with the government, to try to have a safe, thoughtful plan for reopening, and in the meantime, supporting businesses that are really struggling.
Evan, Morgan here. Misinformation has been a big issue across social media and other types of communication platforms in recent weeks where coronavirus is concerned. What are you seeing in terms of that type of activity and those types of misinformation campaigns, and how are you responding to it?
Well, our platform is very different because we work with a list of publishers that we choose. So we curate the publishing partners that show up on our platform, and that's been a huge asset for us at this time when receiving accurate information is really a matter of life and death. So our publishing partners have really risen to the occasion. They put out great, accurate information. We've done campaigns across augmented reality, as well as our filters that have reached hundreds of millions of people. And so we're really trying to make a positive impact here by providing timely and accurate information to our entire community. But our business model really lends itself to that.
Hey, Evan, I hope you won't mind one non-Snap related question. I know you're a keen watcher of media trends, and we're seeing such a rapid evolution of the theatrical window, the way movies are distributed around the country as a result of the pandemic. How much of those changes do you think stick once people are allowed to go back to work? And are you seeing any kind of instructive lessons from countries like Italy and Austria and Denmark and Germany where they are well past the peak?
It's really hard to say what will happen. I think, fundamentally, consumers are going to be fearful returning to confined spaces around other people, at least for a little while. And so I do think what we need to do together as a business community is to help show how deliberate and thoughtful we're going to be about reopening to protect the health and safety of everyone around the world. And I think if we can execute on that as a business community, people will feel more comfortable over time returning to things they really love, including going to the movies with friends and family, which I think has been something that people really enjoy. There's nothing like that big screen experience. So we just need to work together as a business community to create a safe path towards reopening.
Evan, Julia here again. You talked about how you're working with various local authorities to figure out your path to getting your employees back in the office. Our last interview was in your very large office with a lot of open space. When do you expect to get your thousands of employees back into your headquarters, and what will that look like?
Well, fundamentally, it's going to be a slow process for us and really based on each individual's comfort level. We're really blessed and fortunate, frankly, that our team can continue to execute and build on the momentum in our business from home. So we're really excited about the progress we're making right now, even while everyone's working from home and taking care of little kids or dealing with the loneliness of working by themselves. But what we want to do is provide the option to return to our offices when it's safe. So we're working with the government. We're understanding how they're thinking about the timeline for reopening. Obviously, it's very different around the world. We've got 20-some offices around the world, so we have to work across many different governments around many different places. But our team has really risen to the challenge. We're making changes to our floor plan. We're thinking about how we're going to be testing folks maybe for their temperature or other, through a survey, through, other health conditions. We're thinking about our micro kitchens, right, which provide snacks to our employees. What snacks can we provide? Do we have to get rid of ice dispensers? There's so many little edge cases here to think about, and our team's really been trying to get ahead of the curve, execute on those changes. So at a minimum, we can provide that as an option for people that would like to return to our offices. But this is going to take time, and we don't want to force it.
And Evan, I know you're almost out of time here, but I want to ask you about the Olympics, because you've had a partnership with the Olympics and with NBC Universal, and wondering what the impact you'll feel from the impact shifting out of this year. What will that mean to you?
Well, that's been a great partnership for us, and we're certainly excited about the Olympics next year. It seems like that will be a really exciting moment for the world. So grateful for that partnership. You know, as it actually pertains to our business and content consumption this year and our advertiser mix, you know, we're much less reliant on these large events, even though they do, you know, drive some incremental revenue for us than we were in the past, largely because of this shift to direct response that now makes up more than half of our revenue and has for some quarters. So, you know, the Olympics in particular aren't going to make an outsized impact. But, you know, as you know, for the world, it's a bummer that we're going to miss out on bringing everyone together. But we're looking forward to that next year.